We're very excited to share the accomplishments that we've made in 2024 in Crystal View Capital, both on the acquisition side with some of the great new properties we brought into the portfolio, with some of the new team members that we've brought in as additions to our team, and also for the results in the form of great returns that we've delivered to our partners. I think some of the key accomplishments for Crystal View this year is we acquired $59 million of new assets, which represents 13 new properties that we brought into the portfolio. We've also raised over $50 million of equity capital in Fund 4, and we brought on some key strategic new hires into the team. One, Ben Brundage, our new head of investor relations, we're really excited about. And we also brought on Derek Bergeron as our new COO, who's going to oversee operations of all the assets within our portfolios. I think one of the main challenges this year was the challenging capital raising environment. It's been very difficult for not only Crystal View, but for most groups in this marketplace to raise new equity from investors. And the way we overcame this challenge is we really made a concerted effort internally to focus on elevating our brand awareness, to getting out there on social media and showing folks, specifically prospective investors, what makes Crystal View different. Because there are some key attributes which really elevates our brand above and beyond that of our competitors. And it was getting that message out there to new investors that has allowed us to bring in a lot of new capital, which we're proud of. The affordability crisis really pushed us to make an emphasis and a shift to focus almost exclusively on the MH sector. So rewind a couple years ago, most of our portfolio and most of our new acquisitions was heavily weighted towards storage. Now in 2024, almost all of our new acquisitions were MHC, and that's due to this affordability crisis, which we think is going to be an ongoing trend into 25, 26, and beyond. In addition to that, our team has developed a new division known as the Home Sales Coordination Division. And what this team is doing is they're really aggressive in terms of finding new homes, filling vacant sites, marketing those homes, and it's allowed us to fill occupancy at a pace that we've never been able to achieve before. That new occupancy growth is really allowing us to create some significant value across the MHC portfolio and make some outsized distributions to our investors. In general, I don't think this was the best year ever for self-storage. A lot of the main markets, these primary markets, are being oversupplied. For us, as you know, we're mostly focused in these secondary and tertiary markets where we're not seeing a lot of new development, we're not seeing a lot of new supply, so we're maintaining our pricing power. We continue to grow occupancy in those markets. We continue to increase revenue. With that being said, over time, due to the new administration that's coming in, I personally foresee some interesting dynamics. One, I think you're going to see a labor shortage. I think because of deportation, a lot of the construction industry is going to have challenges finding labor to build this new product in the self-storage space and any other real estate category for that matter. In addition to that, we've got a lot of inflation. I think it continues to run hot. The bottom line here is the cost of new construction is going to rise, so that new product is going to have to increase pricing in order to be profitable, which means existing product that's already in place is that much more valuable. So personally, that's the trend that I see moving forward for storage. But to summarize, being in secondary and tertiary markets for us equals power, equals pricing power, equals the ability to continue to increase occupancy. I think one of the main trends that we're going to see coming into next year is higher for longer in terms of interest rates. I don't think rates are going to come down drastically or very quickly for that matter. As a result of that, I think you're going to see less new competition on the acquisition side. A lot of these groups are sitting on the sidelines waiting for the perfect time to get in when interest rates drop back down to 3, 4, or low 5%. We're not really doing that. What we're saying is, while we're in an environment where there's less competition, let's continue to be acquisitive. Let's continue to be aggressive on our new acquisitions. We'll buy right, and then we'll let our asset management team go to work, create value, execute a business plan. And when rates do come down, if they do come down, we're already in a great position where our assets are worth that much more. And if they don't come down, or if they go the other way, we've already bought right, we've executed the business plan, and we've created value for our investors. I think what's exciting for me personally is we've really put some of these initiatives in place to raise capital, and this has worked for us in a tremendous way, in my opinion. That new capital that we're bringing in, we get to deploy that in an environment where there is less competition, which means we're going to be able to create more value for our investors. So that's one thing. In addition to that, we've brought on some strategic new hires, which I think are going to be unbelievable for the company and the team moving forward. As mentioned earlier, we brought Ben Brundage to our investor relations department, who's done a fantastic job of marketing the brand and bringing in new capital into Fund 4. And we've just most recently brought in Derek Bergeron as our new COO, who brings a ton of industry experience on the self-storage side specifically, who's focusing on bringing revenues and occupancies up across our storage portfolio. So I think with these two new hires and some other strategic hires we're about to make, it's going to be a really exciting 2025 for Crystal View Capital. I think really the main thing here for us is we couldn't be more confident in our ability to deliver for our investors in the form of great returns and in the form of value creation in the future, as we've successfully done in the past decade plus. So we're extremely excited about that opportunity to continue to deliver. We're really excited about the accomplishments that we've made in 2024. We're really excited about what the future holds for Crystal View Capital. And I do want to take a moment and just say thank you to our current investors for your continued partnership and your continued trust. And for potential investors out there, we would love the opportunity to build a relationship with you as well. Thank you.